So we're here with Mark Capleton, UK rates and inflation strategist at Societe Generale. Mark, the last time we spoke to you in March, you predicted that the BOE would be raising rates in May and that they wouldn't be lagging behind the ECB. What's gone wrong? Have the BOE made a mistake?
I was worried you'd bring that up, and you lobbed that up me first thing. I think the key thing was not so much the economic backdrop. It was more our interpretation of the way the Bank of England read these things. I think the interesting thing about May is when we got the inflation report and we see the numbers behind the fan charts, we see something quite surprising, and that is that even at the 2-year horizon, which the Bank of England normally focus on, inflation is expected to be 2.2%, and with unchanged rates, the Bank of England would expect inflation to be above the target with about a 65% probability. So even with market rate expectations, the bank sees inflation as more likely to be above the target than below. So that historically would have been a sure sign of an immediate hike, and I think even now the bank has put the market on watch for a rate hike. So it's interesting to see that the consensus has kicked the first rate hike into very late this year, or a lot of people have scuttled into 2012. We still think that the first move will come in August.
So is Mervyn King's credibility at stake if the MPC don't raise rates in the near future?
Well, as he always says, the MPC is incredibly divided. These are difficult decisions, difficult information to assess. I think certainly the repeated overshoot of inflation and the fact that even the MPC expect inflation to fall very gradually to the target and stay and move above to the tune of almost 5% very, very shortly. That certainly it does bring into question whether inflationary expectations will push up permanently on the back of this persistent overshoot.
The problem with inflation is partly due to commodity prices. There's been a fall in commodity prices now. How much is that impacting on inflation currently?
Well, I think it's interesting. I mean, the Bank of England has talked about the fact that inflationary expectations are well behaved. I wouldn't read things that way personally. I think it's interesting that with the fall in commodity prices, inflationary expectations in the US, the euro area, have fallen quite a bit more than in the UK. And also, there's a perverse effect with inflationary expectations because they're based on RPI inflation and rate expectations have come down. That actually brings down inflation mechanically, and that has caused this sort of strange offset. So I don't think, when you strip out those things, I don't think inflation expectations have really come down.
Okay, and to what extent is the ECB now raising rates and the market pricing one in for July? To what extent is the BOE's actions dependent on what the ECB do next?
I think they've flagged pretty clearly that they follow their own path. You could say that the MPC are more worried about developments in the euro area than the ECB does, because the ECB constantly stressed this idea of separation of systemic problems and inflationary pressures. I think that's not necessarily the correct way to interpret things, but I think the Bank of England will certainly do their own thing.
Okay, just moving on to bonds now. When will the BOE sell the gilts they bought in the bond buying programme, and what effect will this have on gilt yields?
Well, they reckon that when they bought them, I think the last estimate from Charles Bean was that the impact was to reduce gilt yields by about 1%. So I guess that's a percentage point that has to go back on gilt yields by the time they've sold them all. But of course, they will sell them very, very slowly. They bought them in less than a year, and they'll spread the sales over several years. But in terms of when they start, I think it would probably be within a matter of months of the first rate hike. They'll outline their plan for disposal. So I still think we could see the first gilts come out, perhaps a tranche of perhaps 30 billion over a 3-month period, maybe at the tail end of this fiscal year. I think the interesting thing is, of course, is that the QE portfolio has made the Bank of England about 16.5 billion at today's market prices. So they could make a handsome profit if they could get out at current prices. But of course, that won't be possible.
Okay, and with the UK government be thinking now about selling their stakes in UK banks, RBS and Lloyds, and would that affect gilt issuance?
Well, I think that's an interesting trade-off, because that would be an ideal scenario in a way, because the plan, of course, is for the gross financing need to come down substantially after next fiscal year. So if the Bank of England were to dispose of its assets as the outstanding need to finance comes down, then that would stop gross gilt sales rising dramatically. It would still mean they're being sold at a very high pace. But if those gilts disposals could coincide with the sale of bank debt, of bank assets of the government, then that would reduce the financing need, and it would ease the pain on the gross gilt issuance side.
Okay, just moving on to Andrew's sentence now. His tenure is coming to an end. Do you think there's some sort of sense of unfinished business, that he couldn't convince other MPC members to raise rates, the Bank of England to raise rates? And what has he achieved in his time at the Bank of England?
Well, I think he's got a growing band of followers, I guess, in the very recent past. I think the interesting thing is to see how a bunch of ex-MPC members who you wouldn't necessarily assign the hawk label to have also been calling for a hike. You've had Charles Goodhart, who was an instrumental person behind the scenes in promoting the whole QE idea. He has been calling for a hike. Jeev has been calling for a hike also. There are the doves the other way, Sushil Wadhwani suggesting no hike, and also, of course, Blanchflower. But I think he can have his "I told you so" moment, if you like, even if he doesn't actually get the rate hike he was looking for. I think a number of the things that he has flagged up as concerns are now part of the consensus. He was early in suggesting that the output gaps was either not being interpreted correctly, or giving a poor steer on inflation pressures and spare capacity in the economy. I think the consensus has certainly moved that way. So he's won several of the intellectual arguments, I guess, even if he hasn't got his rate hike.
And what about his successor, Broadbent? What are you expecting from him over the next couple of months?
Well, being on the sell side of the industry, I never get to see Goldman Sachs research, so I've not got the full insight into how his thinking has evolved over time. But I guess the obvious thing to say is that he is being seen as more dovish than sentence, and I guess perhaps new members to the MPC toe the party line for at least the first couple of meetings while they get their feet firmly under the table. So I think he's coming from the city. I guess he's a pragmatist.
Okay, Mark Capleton, thank you very much.